Welcome back to TechEyeSpy, where we pull apart the stories behind the technologies you invest in. And today, we are looking at a company that helped define an entire category of modern living: iRobot Corporation. You know the name, even if you do not own the products. Roomba vacuum cleaners became that first real moment when households quietly accepted the idea of a robot doing a job they used to do themselves. That quiet revolution spread across the world, and for a long time, iRobot sat at the very top of it, shaping how people imagined the modern smart home. But as we come toward the company's next earnings report, expected around March, this is an episode worth watching in full, because the picture surrounding iRobot right now is not simply one of familiar products and steady consumer adoption. The company is fighting for stability. Its market share has been eroded by cheaper and more aggressive competition. Its margins have been pressured to breaking point, and its financial statements in recent quarters have raised genuine questions about its long-term viability. This is not the iRobot of a decade ago. This is a company approaching a crossroads. So today, we are going to explore the story behind that transition and what it means for investors navigating a constantly shifting landscape. If you are new to TechEyeSpy, or you enjoy these deep dives, remember that all of our full-length investment books published by Roomba Bridge Publishing are available on Amazon and in good bookshops. They explore the wider forces behind each tech sector so you can build a better view of where your money should go next. For now, settle in. We are going to examine iRobot with clear eyes, starting from the ground up, and by the end of this episode, you should have a much sharper sense of what this company still does well, where it has struggled, and how to interpret whatever arrives with that next earnings report in March. Strengths. When you look at iRobot Corporation, you have to begin with the legacy it created. This is the company that normalized the idea of domestic robotics. Before the first Roomba appeared in 2002, the concept of a small autonomous machine moving around your home felt like something from the pages of science fiction. iRobot made it real, and that early mover advantage still carries weight. Even now, 2 decades later, the Roomba name is almost shorthand for the entire category, which tells you how deeply it has settled into public awareness. Another strength is the engineering culture that sits under the brand. The company was founded by MIT roboticists, and that DNA has never fully left. iRobot's mapping systems, its navigation logic, and the ability of these robots to sense, react, adjust, and gradually improve across generations still gives the company technical credibility. Even with the rise of lower-cost competitors, many of those rivals built their roadmaps by following the design logic iRobot established. There is also the trust factor. Millions of units have been sold worldwide, and they have operated for years inside homes where reliability and safety matter. That produces a kind of reputational gravity. Even when consumers shop around, they still recognize Roomba as the safe choice, and for some buyers, that familiarity still outweighs a cheaper sticker price. Then you have the ecosystem the company built. iRobot has integrated its devices into wider smart home networks so they communicate with digital assistants and scheduling tools. That integration gives consumers a sense that the robot is not just a cleaner, but part of a coordinated home environment. This kind of product fit is something newer entrants are still trying to refine. Finally, the brand benefits from a pipeline of patents accumulated over decades. These patents relate to movement, sensors, cleaning heads, mapping, and software logic. Even if competitors challenge the edges of those patents, the portfolio remains broad enough to be a meaningful asset. It represents the accumulated knowledge of years spent refining a specific type of consumer robot, and it is one of the last strategic moats still working in iRobot's favor. Weaknesses. The weaknesses of iRobot begin with the brutal reality of commoditization. When the Roomba first arrived, it felt unique. Today, the market is crowded with robot vacuums and mop systems that look similar, behave similarly, and often cost far less. Competitors from China, in particular, have moved fast, undercutting prices while offering strong navigation and integrated mop functions that match or even exceed what iRobot provides. This has pushed iRobot into a corner where its higher costs no longer translate cleanly into higher perceived value. That shift is visible in recent revenue reports, and it is one of the core pressures dragging the company toward financial instability. Another weakness is the company's late transition into two-in-one devices. While rivals embraced combined vacuum and mop systems early, iRobot held back and continued to treat its devices as separate product lines. By the time it did fully lean into combination machines, the market had already shifted, and the company felt like a follower rather than the leader it once was. In consumer tech, timing is everything. That lost momentum hurt them. There is also the matter of scale. Rivals now have enormous manufacturing capacity and can push out high-volume products at very low margins. iRobot remains more expensive to operate and more vulnerable to swings in component costs. When a company operates in a category that is now effectively a household commodity, being the higher cost producer is a structural disadvantage that is hard to reverse. The company's previous attempt to be acquired created another weakness. The long regulatory process and the eventual collapse of that acquisition left iRobot in a state of uncertainty. Instead of gaining stability and deep pockets, the company is now restructuring with limited cash reserves and a shrinking market presence. Investors know this, and consumer confidence subtly reflects it as well. Finally, there is the challenge of product identity. Many consumers cannot distinguish between the latest iRobot models and cheaper alternatives that promise similar features. When your most famous product becomes the template for an entire industry, the risk is that your own devices stop feeling premium and start feeling like one choice among many. This erodes brand power and suppresses pricing flexibility, neither of which helps a company in financial difficulty. Opportunities. Even in its current state, iRobot still has meaningful opportunities ahead of it because the market for domestic robotics has not stopped growing. If anything, it is entering a second wave. Households that once saw a robot vacuum as a novelty are now prepared to adopt multiple autonomous devices, from mop systems to window cleaners to small maintenance tools that slot into a wider smart home ecosystem. This shift is opening new commercial pathways, and iRobot is already well positioned in the public mind. If the company can refine its product lineup and lower costs, it can still capture value in this expanding second generation. There is also the emerging opportunity of subscription-based services. Some competitors have begun offering consumables, replacement parts, and ongoing maintenance through recurring plans. iRobot has only lightly explored this model, but it represents a stable revenue stream and a deeper long-term relationship with customers. When a company faces pressure in hardware sales, recurring services can act as a stabilizer. It is one of the most promising ways for iRobot to regain predictable cash flow. Another opportunity lies in software. Mapping, navigation, dirt detection, behavioral learning, and room pattern recognition are not commodities in the same way hardware has become. If iRobot leans into its software strength, it can turn core features into differentiators again. Better mapping logic, smarter adaptive cleaning, and more personalized home routines give customers a reason to choose iRobot over a cheaper alternative. Software moves fast. A single generational leap in performance can reshape how consumers perceive a brand Then you have the broader smart home opportunity. Every year, more homes adopt connected speakers, smart thermostats, smart locks, smart lighting systems, and environmental monitors. A robot vacuum or mop is one of the few smart devices that actually performs a physical task in the home. If iRobot becomes a central node in that environment rather than a standalone cleaner, it can claim renewed importance. Deep integration with larger platforms could restore some of the momentum the company once enjoyed. Finally, there is the potential opportunity created by its current financial distress. When a legacy company becomes undervalued, it sometimes attracts new partnerships, strategic investors, or acquisition interest from players who want access to patents and brand weight. While the previous acquisition attempt collapsed, conditions change quickly in tech. A lifeline could still appear, and if it comes from the right partner, it could give iRobot the resilience it currently lacks. Threats. The most immediate threat facing iRobot is the relentless flood of competition. Rivals from China, South Korea, and even newer American brands are pushing out devices at lower prices with more aggressive feature sets. Many of these companies operate with far lower manufacturing costs and can scale rapidly without risking their balance sheets. This creates a price environment that iRobot struggles to survive. When the market becomes a race to the bottom, the company with higher operating expenses pays the highest price. Another threat is the accelerating pace of technological imitation. As soon as iRobot introduces a new feature, rival companies can mirror it in months. This erodes the value of innovation and makes product differentiation extremely fragile. Consumers browsing online now see hundreds of devices that promise laser mapping, automatic dirt disposal, or wet-dry modes. That creates a perception that every product is effectively the same, which weakens iRobot's ability to stand out. There is also the threat of shrinking consumer confidence. Recent financial reports from iRobot have shown significant revenue declines and warnings about long-term viability. When customers sense instability, they hesitate to commit to a premium brand. Nobody wants to buy a robot that may not receive software updates or replacement parts in a few years. Even if the fear is exaggerated, it can still influence buying behavior and slow down recovery. A further threat is the instability of global supply chains. Component shortages, rising material prices, and unpredictable logistics have already hurt iRobot. These pressures interact badly with a company that runs a higher cost structure. In contrast, larger rivals with deeper pockets can absorb volatility more easily. Each disruption chips away at iRobot's ability to operate effectively. Finally, there is the wider threat of the smart home giants. Companies with vast resources and established ecosystems could enter the domestic robotics market with devices that fit seamlessly into their platforms. If a major hardware or operating system provider decides to launch its own autonomous cleaning robots, iRobot risks being outmaneuvered before it can respond. Competition from a giant with an existing ecosystem could be the most significant threat of all. Conclusion. When you step back and look at the full picture, iRobot is both a pioneer and a warning. It is a company that changed how millions of people clean their homes, and it carved out a place in modern life that very few robotics firms ever achieved. Yet it now stands in a difficult position, squeezed by lower-cost rivals, pressured by weak financials, and overshadowed by the very market it helped create. This is the paradox of innovation. You can be the first to build the path and still struggle to stay on it once everyone else starts walking the same route. But this is also why watching the next earnings report in March matters. It will tell us whether the company's restructuring is stabilizing its foundations, whether consumers are still choosing the Roomba name, and whether the market gives iRobot another chapter or quietly closes the book. For investors, this is not just about a legacy brand. It is about understanding how quickly a leader can become vulnerable and how a vulnerable brand can still turn itself back into a contender if it can evolve at the right speed. If you enjoy these deep dives and want to explore the wider technology landscape that shapes companies like iRobot, you can find our full range of TechEyeSpy investment books published by Roomba Bridge Publishing on Amazon and in good bookshops. Each one builds out the context that sits behind these episodes so you can navigate the markets with more clarity and more confidence. Thank you for watching, thank you for supporting the channel, and as always, stay curious and stay informed. I will see you in the next episode.